the right way to kind of have this discussion would be to kind of we recently, obviously Ant has been one of the largest IPOs, largest fintech IPOs, and I thought it would be interesting for us to go through the Ant model, and then sort of using that as a context to frame the discussion, and I'll kind of take you through the comparisons between India and sort of China. So obviously, I think the biggest thing that stands out is the enormity of the size and the scale, and the fact that China has built such a large fintech platform. You have obviously almost close to $18 billion of revenue, with almost 36% being provided by credit, 36% provided by payments, but majorly it's also credit, investment tech, and insurance tech. One of the interesting things that has sort of obviously played out in China is that the fact that it started with Alibaba and the fact that they could build a very large payments platform. And obviously the payments platform was a wallet, and the wallet almost became like a virtual account, which eventually led to a investment product, which was a mutual fund product. And then eventually using that data to kind of mine and build a credit platform, and then sort of moving on to insurance platform. I think the interesting thing, which if you look at China versus India, you would notice that even in China, payments doesn't make much money. So almost 20 bips of makes a gross margin of about 20 bips versus China of about 20. When you look at India, obviously it's a zero revenue opportunity when you look at mobile payments in India. But even when you look at China, it's very, very thin margins. So obviously, significant amount of money has been made on the fintech side, particularly on the credit, investment, and insurance. And also the other fact is this has been a fairly homogeneous opportunity with two major players, one sort of coming from the social media end with WeChat, which is sort of Tencent's fintech platform, and then Alipay, which is sort of Ant Financial, which came from the Alibaba stable in terms of the e-commerce platform. So not very different from India when you look at payments as well. Payments doesn't make a lot of money. The other thing which kind of stands out in China, and when you actually compare this to India, you would notice that Chinese banks, particularly when you look at products which are friendly to fintechs, which is around unsecured lending, all Chinese banks combined are fairly small relative to the disbursement and the kind of opportunity that the credit tech platform has built for Ant. And we'll talk about this when we actually get to the Indian consumer credit tech opportunity. The other thing also is, if you look at China, it's obviously a regulatorily tight regime, so almost 8 to 16%. If you look at the interest rate, it's about 8 to 16%. So not very high. When you compare it to the interest rates in India, they're sort of significantly higher than this. On the investment tech side, like I said, it's the fact that they had these virtual wallets, which resulted in a very large investment platform, which is sort of one of the world's largest one of the largest fixed income products in the world, which is what we call Yaobao, and then sort of using that manufacturing capacity to get into distribution, and almost all the mutual fund companies kind of partnering with Ant to be able to distribute on Ant's platform. And then similarly on the insurance side as well, if you look at the insurance platform, given that Ant has been able to build this kind of scale, it's been all the mutual fund, all the insurance companies as well have partnered with Ant with regard to sort of the distribution and sort of distributing significant products across life, P&C, and asset management, and using Ant as the base as a platform for distribution. I mean, the other thing which I think I must highlight with relevant to China with India is the fact that China, Chinese banks have not been, the large Chinese banks are state-owned. There are very few sort of dynamic state-owned, this dynamic sort of private sector banks in China, and the result of that has been that this gave that tremendous opportunity for Ant to build that. So important point here is, we were discussing this with many of our clients, is whether such an opportunity can be replicated anywhere else. But what we found out that it's significantly part dependent. The unique circumstances of China were such that when Alibaba was formed and sort of Alipay, which was the wallet and the escrow service, resulted into which resulted into this significant platform where multiple virtual accounts were formed, which resulted in that investment tech opportunity of building Yaobao, and then using that investment credit tech and insurance tech were built. So the sequence of events was such that to begin with, you had a very large e-commerce platform, and the fact that you could use that to build payments and then build investment and credit tech was a very unique set of circumstances. The Chinese banks were not very active. At the same time, there was a huge regulatory period of not very active regulatory oversight for a significant amount of period to build that kind of opportunity. It's only when they became really large and became very significant to the system is when the regulator kind of started noticing and started sort of imposing certain restrictions in terms of what they could do. So fairly unique set of circumstances for Ant to evolve. I don't want to spend too much time on Ant. This is a bit on credit. I think the fact that they allow banks to make almost 5% net ROA, which is significantly more than what Chinese banks can make. Which make attractive at the credit default rate. The fact that this is very lucrative product for banks to partner with Ant, it is exactly that which allows Ant to have that bargaining power with the banks. And it's not very different when you look at investment tech and insurance tech. The reason mutual funds partner with Ant and the reason insurance companies partner with Ant is that they are not able to obviously get that kind of size and scale of almost 1 billion downloads. And obviously that results in significant pricing power. And one more interesting things I would like to discuss is when we get to India is whether such circumstances are being replicated or not, and would anyone have these kind of bargaining power in India going forward. I'll skip to India, and I won't spend too much time on India because I think we are very aware of the opportunity. The only thing I want to highlight is that India is a fairly heterogeneous opportunity, and the fact that you have payments players which have built very large. Paytm was a wallet business. UPI came along, which allowed the big tech, the likes of Google and Amazon and even WhatsApp to kind of build payments businesses. WhatsApp is still to kind of launch, but it's allowed Google to build a very large payments business. So it's clearly not a game of wallet in India. It's obviously moved on to with big tech players playing out. So it's a fairly dispersed market. And all at the same time, you have this wild card with Jio, which is aggregating tech, and then is likely to build a platform, a commerce platform. And then if you kind of compare it to the Alibaba example, this is one case where you may have a commerce platform, and then the payments and the financial infrastructure will need to be built going forward. So still very early on the telecom side, but again, some elements emerging where financial disruption could come from. And then obviously, the last bucket, which is what I call others. I don't have all the names here, but clearly what we are building is the Stripes, Squares, and the Shopifys of India going forward. Again, fairly early, but going forward. And one more important category, which is what we call neobanks, which we'll talk to Jiten about. So I think clear message that India is not a homogeneous market. You won't have one significant player which will have that kind of bargaining power, but the fact that it's going to come from all directions. I won't spend too much time on UPI, but clearly UPI has changed. It made it multiplayer, it made it interoperable, and given that we're going to have a new payments license on retail, multiplayer, multi-network, interoperable, and that's going to change the dimensions of the market. Again, just comparing India versus China, significant headroom on digital payments. So we're still not done on digital payments, and hence you'll see, digital payments are still likely to move up. Mobile versus cards, again, China is about 70% mobile, 30% cards. When you look at India, it's exactly reverse. When you look at merchant payments, I think eventually, that's the kind of mix we would head towards, which is significant share towards mobile payments. If you look at the unit economics versus India versus China, again, 20 bips, like I said, mobile payments is not very profitable. Much of the money is made on the credit tech and the insurance tech side. Credit cards, again, more profitable than mobile payments. India significantly, the largest revenue pool and largest profit pool in payments is credit cards. And again, this is one more important strategy which each of the players in the fintech space, in the consumer fintech space, will also look at. Again, size and scale is not comparable, but clearly, if you look at the size, billion downloads, the downloads, again, fraction of that in India when you look at MAU. Credit tech, nowhere around the picture. I mean, the 99% of the market still resides with banks, and banks is where they focus on the mass affluent opportunity, the mass affluent lending opportunity, and that's why much of the revenue pool resides with the bank on the credit tech side, and sort of fairly fractional share of the revenue pool and disbursements for the fintech and the broader technology-led ecosystem. Similar story on the investment side, insurance side. Some initiatives made around Paytm Money with mutual fund side. What Nitin is doing with Zerodha, again on the mutual fund side. Very early days with insurance tech, particularly the largest player in insurance being Policy Bazaar. So I won't spend much time here. I already spoke about how mobile payments is going to be a large share of the pie. India is going to be a fairly heterogeneous market, in my view, with regard to consumer tech. There are multiple opportunities. Some are sort of doing it with credit cards, some are doing it sort of in partnership with the UPI payment players. Some are following buy now, pay later models. Some are obviously gonna spend, straight up sort of app-based or techno platform-based lending. So, multiple sort of opportunities and models emerging here, not just one single model that we saw with Ant. Similarly, on the distribution side, I think it's more a distribution play in India. Manufacturing is not, when if Nitin was here, we could have spoken to him about, his manufacturing plans on the mutual fund side. But again, India is significantly a distribution play. Insurance, again, Paytm is looking like doing something on the distribution, on the insurance side with building their own insurance company. There are some digital insurance companies. Policy Bazaar is clearly a large player from a distribution platform. And to some extent, if you see the kind of bargaining power that we saw with Ant being a very large platform and being able to kind of command some kind of distribution power with the manufacturers, to some extent, you'll see that with Policy Bazaar. And then finally, the merchant tech side, very, very crowded market with, on the merchant acquiring side, the likes of Paytm, BharatPe, and M-Swipe trying to build large merchant acquiring businesses. It's a fairly relationship-based model. And we'll see sort of how that model emerges. Jio is making a spin here in terms of building a point of sale network in sync with its retail network. And then obviously smaller players trying to add value to small retailers and kiranas with accounting, software and other kind of value-added services. And we'll see how that model evolves to a broader merchant tech landscape. So I think I'll stop here. To kind of compare that. So two things, gentlemen, I think what emerges for me. One is, India doesn't look like a market where banks are not sort of dynamic enough or smart enough, and they own sort of significant part of the revenue pool. And the second, emerging a market where one or two has bargaining power to sort of build a platform like Ant. So I think what I'm going to do is sort of go across the room, get initial reactions from Jiten, Ganesh, and Rajat on these dimensions. Jiten, I mean, what do you think? I mean, where do you think our landscape is going to evolve to? You think we're going to have a consolidated market? You think we're going to have a sort of fairly mixed market?
So thanks, Gautam. So first of all, what you just showed about Ant, and I've seen similar numbers for VPay, WeChat and VPay. I think it's a massive numbers, and sometimes being an entrepreneur, you just sort of don't even aspire those numbers and
Sure.
like imaginable numbers, frankly. So and whenever you look at these numbers, you kind of keep getting motivated more and more to build for India. So so definitely massive opportunity India has got. Your question of whether we would see something similar in India, I think I have my own doubts in terms of whether you would see something similar in India, and the sole reason for that is. I think till date, the customers haven't got that kind of spending power, and it's because I think we keep comparing overall population size, but what we keep ignoring is the consumption power, and the payments and financial services are effectively the derivative of per capita income. So, like per capita income, we are not even one third or one close to one fourth now after COVID. So, so from that perspective, I think we are still, in my view, a decade away to see this kind of volume combinedly in the market. Forget one player or two player per se. So, but that also gives me a silver lining, saying that in a decade at least we'll be able to see these numbers, and it's a massive opportunity to chase. Whether it will be one player market or even five player market, I think if you look at banks in India, there are like 60 or 70 banks. And when we sort of look at their retail book or retail portfolio, I think most of them are doing well.
Yeah,
And most of them are making money.
yeah,
Uh, so, or like, who could imagine like SBI cards will have such kind of volume and valuation
yeah,
until the numbers were disclosed.
sure.
And I think, so that kind of opportunity, and if you look at it, like still in a market of 1.1 billion people, we have like just 25-30 million cards. So the penetration is like very very low in financial services or insurance if you look at it, or any financial services product if you look at it, other than the banking product where we thanks to this Jandan and all of that now, fortunately looks like 90% plus people are banked. So massive opportunity. It will continue to remain a multiplayer market, in my view. The only unknown part, I would caveat, is WhatsApp, and I think
Yeah,
that part is like heavily unknown in terms of what the dynamics could happen post WhatsApp Pay is in full swing. I think that dynamics is to be known, and that is the only one company I see could generate or consolidate the market in a massive way when it comes to payments, or and if they have aspiration into lending and other financial services. I think that is the unknown part I would qualify.
yeah, absolutely. I mean, the reason I wanted to kind of start with Ant and sort of compare the opportunity, one of the biggest differences between India and China is the fact that Chinese banks are not as smart as Indian banks. The Chinese banks mostly lend to state-owned enterprises. Obviously, they have very large balance sheets, but don't really focus on the consumer as much. And that is exactly the opportunity that Ant has captured. So Ant is pretty much the meta financial services platform of China. When you actually look at the sort of the mass app, across markets, with the kind of billion downloads or the kind of monthly active users that they see. And that, frankly, opportunity has been taken by the likes of HDFC Bank and Bajaj Finance in India from a mass affluent perspective. Obviously, it leaves, as you said, there are only 25 million cards. It leaves significantly unaddressed opportunity, and which is where I think sort of fintech fits in. But clearly, I think you're right. I mean, it's a multiplayer market. Very hard to see consolidation as of now, and we'll see how it goes. So let me move to Ganesh. Ganesh, initial reactions to the presentation, and then how do you think the landscape and the market will evolve in terms of the different players?
Thanks, Gautam. Yeah, it was interesting to see your initial presentation and Jiten's reflection. So I'm going to do something a little bit unconventional, move away from Ant, because last 72 hours I've had Ant coma. I've talked
Oh,
about
I
it,
see.
and you and
Sure.
I also talked about it when we did the session, if you remember. But again, I'll I'll respect your theme, but I'm going to move away talking about Ant, because if we do that, like I said, there's nothing
No, I
else.
don't think. Yeah, I mean, I don't think the idea is to talk about Ant. The reason I wanted to talk about Ant was to kind of show you the size and the scale, and show you sort of how early we are in India. And from that perspective, how do you see sort of that landscape evolving? So the idea was not to take reactions on Ant, but to kind of see where we stand relative to other markets here.
Absolutely. Yeah. So I think Jiten's covered some part. I'll try to sort of be complimentary to that and talk about a few things that a few reflections that I've been going through. I think excuse me, different markets, there are different markets that get built on the back of certain foundations at different points of time in the cycle. And you talked about this with Ali and Ant, and we don't have the same environment, we don't have the same customer base, we don't have the same foundation, we don't have the same ecosystem. So you cannot expect the same to be replicated, right? So things will get built in different ways. The question is what are the breakaway opportunities for us? And even though I completely agree, and we talk about the fact that we invest in 14 countries, banks in Brazil are probably the most inefficient in the world, which is why you see some of the most successful neobanks. I mean, the number 2 neobank in Brazil is in our portfolio called Neon. The number 1 is Nubank, which most folks know. Now we are not as inefficient. Having said that, we are also highly underserved, which is not very evident, right? Like for about 12 years, we have been investing from microfinance to personal finance to SME finance to housing finance to pay later to various consumer finance opportunities, not just credit, but I'm just taking it because it's a common thread, starting from microfinance 15 years ago to now. I think the under penetration remains because there is a certain way large institutional foundations are built in end-to-end cycle, and there is certain business they are good at doing, and if they're able to mine those customers more and more, they'll stick to it. Yes, there is a point in time where certain degree of concern sets in that look, there is a future coming which might sort of eat our lunch, but it's end of the day human beings who run the organization. So it's a thought that you sort of keep vacillating between. Sometimes the FOMO really hits you, and sometimes you say, what, we have a great business, look at how well I did this quarter, right? So I think it's not a linear thought, the way we try to think about this thing. That's one. The second point is, at the same time, unlike many markets, whether it's China where Ant exploited these gaps, or what we are seeing in Brazil or in the Valley where people can stand up and say things, which is the first thing I learned when I started my career in Valley. We say, all incumbents will be erased, like it's a new age, right? In India, it's going to be collaborative. It's going to be collaborative transformation. I don't think it's going to be radical, kill the banks or kill the incumbents and we'll move forward. It's going to be collaborative, but there are a couple of things which I think we need to be cautious of. One is we see enormous crowding out in our country, right? We have too many smart entrepreneurs. We have too many smart investors. So before an idea is formed in somebody's head, you see 10 companies coming up in a space. And we are time and again seeing markets being destroyed, right? So I'll give a classic example, and it's a little bit off tangent, but bear with me for 30 seconds. I don't know how many of you have heard of Stone Pagamentos and Park Seguro.
Correct.
I told you this. They're same vintage as some of the alternate and mobile POS companies in our country, which you guys know the names of. Together they went public last year. Same vintage, total market cap of over 20 billion right now, and you can see where we are in India, right? So the ecosystem, the entrepreneurs, the investors all came behind a couple of companies in helping build, versus we have dozen companies and we are all sort of really eating into each other's lunch. So that is a very, very, very serious issue in India. Frankly, I don't think it's talked about enough. We don't recognize it as much. Having said that, I think we now I'm just switching over to the domain side. I will say we also see cycles of unbundling and rebundling. Right? There was a period where you started seeing specific investment or wealth tech or insure tech or savings or payments or credit solutions sort of come up. I think they're all in different points of cycle. I mean, credit is more mature. Maybe something like insurance is a lot less mature, and it clearly has the long way to go. But I think we are at different points in the cycle. But I think at least in some cycles which are maturing, we are hitting a rebundling point where you're starting to see distribution platforms come up which are able to do multiple things. And you talked about this a little bit. Frankly, we dwarf in front of China, right? We really dwarf. But I think we are starting to see some sort of exponential foundations of partnerships being established even within our portfolio. I mean, a couple of our portfolio companies which you also put up, where I believe we will see exponential growth in the next few years, and there'll be a few more companies that will come up because India is a complex, fragmented opportunity where not one player is not going to win. As long as a China situation is not replicated where one player is blessed by the state or regulator and the rest are not. If we let free markets flourish, I think it's a market which will require multiple players. And the last point on this is, and I say this in every forum, I think we have started building over the last 5-7 years phenomenal public infrastructure, which very few other countries have done. It's actually remarkable, right? Some of the new things happening. The caveat and the flip side of that is, I sometimes worry that we do not recognize that the common man is not super tech savvy. They do not run their life on tech. It's very hard for banking ecosystems to really embrace a lot of the new things we are coming up right away, while they're still able to sort of keep up with what's already happened 3, 4, 5 years ago. So I also feel sometimes we might end up confusing the ecosystem, and making too many iterative changes which will not let success flourish or scale. So I know it's not sort of probably the answers you were looking for, but I thought
No, absolutely. I mean, I wanted to kind of start with broader comments, and obviously there are multiple areas we want to get into going forward. So I'm going to move over to Rajat. Rajat, you've been, we met long back, I think about 6-7 years back. You've been working and sort of evangelizing almost a model which was not even regulated back then when you started, and then obviously RBI came in with a lot of regulation. Having sort of been through that journey, where do you think, I mean, I would love to hear your reactions to Jitendra and Ganesh's comments, but where do you think we are in this fintech journey? And again, how do you sort of see different kind of models emerging and different players emerging?
Thanks, Gautam. Yeah, I've been hearing your deck, and I think the last slide says, what can India learn from ants scaling up? So that's the elephant in the room, oxymoron, ant and elephant. Okay, so having said that, I've been fortunate and unfortunate, whatever you can call it. I've been, I think, the oldest internet professional between all of us. Having gone through multiple cycles of internet's euphoria and downside, starting with the days when we used to have message boards, and a portal was the in thing, Yahoo portal, and everybody was competing with them. Then came Google. So I know those vintage times. But one learning which I got was that in the whole ecosystem, whatever you're trying to create, whatever model you're creating, you need to start firstly, a very obvious thing I'll talk about is a consumer insight. And typically platforms do win eventually, supply side, demand side platforms. And they typically take a lot of time. They typically take anything between 10 to 20 years to build and get into a disruption. And the disruption and the movement of the customer moves overnight on that day, but it takes 10 years. Okay. Now, I know I'm talking a little differently, that it takes 10 years for an overnight thing to happen. And frankly, I've witnessed myself those kind of shifts happening in different businesses. The initial phase was whether it's the news, whether it's classifieds. Naukri.com just took away the whole market share of Ascent overnight in a period of 7-8 years. And 2008-9, it suddenly moved away. A 400 crore brand wiped off overnight, more or less. Of course, 400 crores in today's world, you don't feel it that way, but it happened. Whatever the dominant, with an 80% market share, 90% market share, Ascent had for jobs. Similarly, we've seen in matrimony and everything. So those were the first wave of disruptions which took place. In my mind, now the fintech is the second place which is coming in. And since we have concentrated on the lending space of the thing, I'll talk about that. In my mind, payments and all that is infrastructure business. Nobody wants to be in it. Frankly, the banks never wanted to be in it. They don't like the teller sitting out there. They hate the ATM machine. Now even you will be just talking about the payments don't make any money. It's a customer acquisition strategy. In my mind, people who are trying to replicate the China model, I think that will not play out in India. It's never played out. Which I think Jitendra and Ganesh have enumerated the facts about that, right from per capita income to disposable incomes to the models. We are a much more dispersed and a distributed model of business in India, and the fact that you have very smart entrepreneurs and investors, I think that will not play out here. The pitfall in India is primarily that the only difference in India between America and India is that our CAC is in dollars and whereas our revenues are in rupees. So I don't know how will we solve that problem. When I say CAC is in dollars, it means that Google and Facebook are the ones where you end up spending money, whether it's you getting a lead from Policy Bazaar, Paisa Bazaar, or whatever it is. End of the day, the source, as they say, the Gangotri of all internet traffic is Google and Facebook right now in India. And you end up spending those dollars to get that customer, and finally when you monetize, you're monetizing in rupee. And frankly, in India doesn't have that kind of purchasing power for you to build a profitable business. Okay, I think the good thing about present state of affairs is post-COVID that everybody's talking profits. We are happy. We've been talking profits. We are more or less profitable as a model. We scaled out. Yes, we are not very visible in the market and all that, but I prefer that way because the financial services business has to be built diligently, especially in India, from that perspective. Having said that, I come from a school of thought where the way we see the future coming in, I'll get into a little gazing out there before everything is gone. I think the banks and everybody will have they will wither away. It's inevitable, especially with the data streams which are coming in. Most of the lending business have concentrated on the demand side or the asset side, because that's sexier and everything. You can go and service. Ganesh talked about they're trying to solve the last mile problem or the credit problem with MFIs and all that. In my mind, it's not about underserved. There are bigger two problems, which is there, the cost of capital and the credit culture in India. Having said that, we keep talking about collection unless the money is back in all that. And frankly speaking, right now, the present situation is the credit culture has been totally destroyed. What are we doing towards the credit culture as an economy, as a company and everything? And what are we doing, how to reduce the cost of capital? So main problem of all the MFIs is they're all lending above 36%. Frankly speaking, if you ask me, if you're lending above 36%, you don't have a model. Sorry to say it a little that way. What you're doing is if you have a cost of 12% and you're lending at 36%, basically you're putting out money out there and thinking I'll have a good day. And you put in a lot of force for collection and then you get your money in. So I think a lot of work needs to go out there in these aspects of the businesses, which will drive the at least the lending piece. And that's where we come from a school of thought. You said that why are you so wedded to this? For 6 years, 7 years, you've talked about we're building something which is totally different. So we think we can't go and beat a Bajaj Finance. Okay, if I open another NBFC, and I don't think I have the capability or nor the idea to do it. And it has been proven that I've seen all the digital lending models. It has not taken off in India. Let's be true to ourselves. Okay. All the big names, they've raised a lot of capital, but they don't have a model in terms of really lending money. Sorry, I may be troubling a lot of people out here, but genuinely speaking, they have lent out a lot of money. But if I see the numbers today, they are more or less back to normal. Okay, none of them are even eating anything into Bajaj Finance. It's the sexiest fintech company out there. What Bajaj Finance does in a day, most of them do in a month, or the best one does in a month.
Sure.
Okay, so I think from that perspective, you need to attack the supply side. We need a disruption. We're talking about neobanks and all that. What is we can do on the supply side? That's the reason what excites us. how do you create a new supply of capital wherein you can genuinely go and disrupt the models on the asset side. So having said that, this is the ecosystem and the worldview we see it from, and that's the reason we are focused on what we are doing. And I think we'll continue building a digital lending platform. So we started with a P2P model. We are more or less like a digital lending platform, which encompasses all kinds of borrowers, all kinds of lenders, including institutional lenders. So how you build the business, that's fine. Amazon started with selling books. Now it sells everything.
Sure.
So that's how we see the business moving around. And that's it. I think that's the
great. Thanks for that overview. So rather than sort of, I'm going to get into a few specific topics. I think we've got remarks from everyone. Starting with Jiten. So Jiten, when we actually look at the maximum value being created in financial services, obviously it's been created by the big banks. And what you are trying to do is trying to actually replicate that journey. And the reason I say that is that many people would have obviously tried to jump directly to lending. And I think to Rajat's point, very fair that lending as a disruptive opportunity has been a bit underwhelming. You're starting obviously from deposits and you're starting from liabilities. So what were the design choices that went through your head to kind of start this journey using deposits? I wouldn't get into whether neobank will succeed or not, but I wanted to get into the rationale behind your thought process.
Sure. So Gautam, when my last two stints have been in like payments and bit of lending, so through pay later product Lazy Pay. And I think after running these two businesses, what I realized is that the customer relationship is highest in a deposit product as compared to these two businesses. These two businesses, customer is more transactional with the entity he or she is dealing with, and and my personal ambition was sort of to create a business which is more long term, and I can run it for next 20 years. So when I looked at these all factors, I realized that deposit product is the product where the customer places the highest amount of trust. Is the most difficult one to crack, by the way. And if you're able to crack that, then building other products on top of that, because like why banks are succeeding, or why banks are having the highest share in lending or highest share in insurance selling or whatever, the XYZ mutual funds and all of that, because the relationship with customer is so strong and the trust among the customers is so strong that they end up having success in other products also, because of the customer's obvious choice coming to their preferred bank. And I think that is the thinking or design choice what we took when we thought that whether we should sort of start with the lending first or a deposit first. We said, deposit is hard, but let's pick up this hard game, build the relationship with customer, and then doing other products on top of that. We can do that any day.
Follow-up question to that, right? Again, on the design choice, right? And this is again important because this is to what Ganesh said, that we will never have a disruptive product. We'll always be collaborative. We'll always be frenemies, like you say, so you have a. I think right now it's a friendly relationship with the bank, but when you actually look at this choice again, one option is to dirty your hands, get a license. To some extent, Paytm is doing that with the payments bank and sort of trying to scale that up. To some extent, I think you can get an NBFC license and build from there. How did you think about how much you want to dirty your hands with the regulator versus not?
So Gautam, the way I see is that sooner or later it is inevitable. Like if you are into a banking or anything related business, you don't have a choice but to get into a regulated environment sooner or later. But came to the decision around business model that what is the right timing. We realized that the right timing would be when we have the business model proven itself. Like today, if you look at it, you spend a couple of years, let's say, getting a license. and then you realize that there are no customers and no difference, the world would have changed, first of all. And second, that like, what is your USP now? And you sort of start thinking that, and your regulatory overhead is more than your the business which you're trying to create. So keeping all those in mind, we said that let's first prove our model that customers are really happy with the new experience of banking, what we intend to provide, or the new or a better experience, the customers would love it. If that happens, then it makes sense to do the grunt work of going after the license and all of that. If that thesis itself doesn't play out, then having a license also won't help. So we took this other approach. They said, let's sort of take the pain of working with a bank, but at least the regulatory overhead and the whole compliance overhead is still being taken care by the bank. And you focus on building the product and getting the consumer validate your thesis, and then take the other call.
Yeah, I mean, I think what I find interesting about what you do is essentially, I mean, I know, I mean, everyone says that you're building a new bank, but I think essentially what you're doing is you're trying to redefine the journey sort of step by block, and process, build relationships, and then to large. Yeah, Ganesh, let me take your view. You know, this neobank brings very binary and very sort of controversial reactions from everyone. And so without trying to intrigue Jiten too much, but tell me, how do you see that? I mean, and you know, I really respect Jiten because you know I've kind of tracked what he's doing. So it's not so much about the neobank, but I really understand sort of the pieces that he's solving. But let me get your reactions on neobank.
Sure. So I think see, 18 months ago there were no neobanks in India. And we have 4 neobanking investments around the world, one of which we actually exited to Gojek. So I'm not an expert by any stretch, but we at least had seen 4 more in India had seen till 18 months ago. And to the point I made, in 18 months, we have more neobanks than actually the other 13 markets that we are in. So this is the fundamental challenge of India. I think what we are, what I'm personally unable to parse is there are companies which have been pivoting, right, which have raised reasonable amount of capital. They have been pivoting, and I think the latest pit stop is neobank. So I'm just coming in from an outsider's perspective, why it confuses people. And when it confuses people, it's very hard to build the ecosystem and build a company, right? And that's part of the challenge folks like Jiten will have, who are starting a neobank from scratch. So there are companies which are pivoting, which have capital, but which are pivoting, and now today they are neobank because that kind of serves the market context. Second, we have companies which were providing certain products, maybe did a decent job in those products, but they realized that just now calling yourself neobank and adding maybe one more product to a certain extent just helps expand the markets or makes the market look at you more favorably. Now there are those also. And then third is there are new age players who are coming in, of course, Jupiter is one of the pole players there, trying to figure out what is the right way to sort of enter and build a customer relationship in a quality way and engagement, and then expand, right, while also navigating the regulatory spectrum. And it's probably like Rajat, to the point that Rajat made, at least a new age bank, if you have to build, is going to take some time, right? The fourth is the inefficiencies in India are lower than they seem, and this is the challenge which I struggle with, where from what we have seen in at least the companies in our portfolio versus even like, for example, some of the challenges we are seeing even at scale in some European neobanks. I think the ability to kind of figure out a deep product or a deep market segment to be able to go into, to create a pole position and then build out from there, you need some breathing space. In our country, breathing space is just not there. And obviously companies will get created, but this idea that, we have oversold India. Frankly, we have oversold India. So there are too many people who are excited to be in India, and there is a lot more capital in the world today than, when whatever I started investing 12, 13 years ago. And this is a real problem. It's not, I'm not addressing directly the question of ABCD, 4 reasons why I like neobank or don't like neobank. But what I'm saying is, frankly, these issues are bearing down a lot more on how the market is evolving and making it challenging for, quality entrepreneurs and like Jiten to actually sort of make a point. When you go to HDFC Bank, there are 12 ICICI Bank and HDFC Bank. There are 12 folks talking to them, right? Now, obviously, hopefully you'll be able to make a breakthrough, but the person sitting on the other side is not living and breathing neobank or tech. And so it's just we have made it very complex for ourselves, and there are too many of us, competing and fishing in the same pond. And neobank happens to be one more such example.
The only sort of comment bank. Actually, you need a completely untainted.
Hey, sorry, I think you're breaking up, Gautam.
Yeah,
Gautam, you're breaking up.
At the same what I, I was. Yeah, can you hear me?
Yes, this is better.
Hello. Yeah, perfect. Yeah, sorry. So I think what I was saying, I think the bigger question is not whether you call it a neobank or not. What we need is essentially a set of untainted, unconditioned people who have not been sort of taught in the old school to look at the same problem, right? Simple deposits, simple banking, simple transactions, and sort of redesign that, right? And then, so as part of my communication, and obviously because I talk a lot to the big banks, one advice I definitely give them is to have 2 separate teams, a completely new team to look at how you can redefine this journey. Because what banks tend to do is they take the same people who worked under branch banking for 20 years and make them like significant digital contributors or sort of digital leaders within the organization. So I think that separation of the team, whether you call it, a new bank, sort of redefine their journeys, because this is our sort of, since it's so hard to change that. So.
Sorry, you're breaking up
again.
Yeah,
I think that's okay. Is this better?
Yeah, for now, yes.
Yeah, it's much better.
Okay. So I'm going to move on to the next question. So on lending, right? Just sort of double clicking on the lending side. You have a what we now call a buy now pay later model. You also have sort of lending apps. Similar such platforms like Lufax in China, or lending apps, what we call digital lending. And then you have something as simple as a credit card, right? Like I'm a big fan of credit card. So you also see a lot of fintechs, trying to build or trying to partner to launch a credit card. So you also see Bajaj Finance launch a credit card for that matter. So are we, my question to you, Ganesh, was, and then to Rajat as well, because Rajat looks at this space very carefully. What do you think is the most feasible segment within credit tech to build? Are we overcomplicating this? Should we just all stick to credit cards?
Well,
yeah. Well, I think we tried credit cards for a long time.
Yeah, Ganesh, let me take a quick reaction and then I'll move to Rajat.
Sure. Yeah. So I think card, it's had limited penetration because the country works in a certain way. And of course, now the debit cards have evolved, payment infra has evolved, the way things work have evolved, BNPL is coming up. So things keep changing. So it is certainly, I have always believed in credit card as a product, frankly, but if you look at data in India, you won't be able to justify it. And I think we are now seeing the latest wave of cards, where in the last 2 years, bunch of banks, large financial institutions, even fintechs feel that a card is sort of a good way to enter, because most of the time the language I hear is 2 things. One is either it's a hygiene factor for a customer I already have, so that they don't get the card from somebody else, I give them the card, or it's a good profit pool. Now, I think, and a lot of that has been reinforced by SBI cards as well. But there is only one SBI, to be honest, right? There are not many. So, frankly, in my view, the jury is out, because data shows that just the adoption and usage of cards in India and people's repayment behavior, all the combination of these three, the scale and volume, and the monetization models, all three have had their challenges, and with certain segments, at least one can make a case that and India is not like the lower, middle, and upper class. Like they're like so many different strata. In some places it will be just seen as prestige. In some places it's hygiene factor. In some places actually people will use it as a revolver. The question is there a meaningful enough pool in any of these segments which will really adopt to it? Number of folks in future, frankly, might say, why do I even need the card? If I have the functionality, that's great, which is where your BNPL comes in, right? So I don't think the data supports. It's just that there is definitely
sure.
investor excitement and large companies waking up to trying it one more time.
Yeah, I'm going to give my reactions, but after Rajat. So Rajat.
Yeah, so I see it a different problem. Look, yeah, can I?
Your take on this,
Yeah, so I'll tell you, we work with a lot of these people. So look, we are a credit platform. So we are exposed to a lot of different types of borrowers and different fintechs. So we supply a lot of capital to a lot of fintechs, which we're talking about. So now my learning from it is that everybody's grappling for a business model. Let me be sorry, and they are all looking for various pools of revenue and profits are all around the place. And somebody has a view that, okay, credit card is a great thing, pay later is a great thing. Somebody is working on the deposits part of it and all that. This is all experimentation around the bank's various revenue pools which are going on. All these models around e-pay later, sorry, I'm not using the word, the brand name, but paying later and models, those kind of models, I think they are still in the experimentation phase with a proper risk modeling or a actual model which has been built other than the credit card model, which banks have gone through. There are at least 3 to 4 cycles in the last 20 years. Okay. Other than that, moment they're moving into the unbanked and people giving out these products to people who don't have a credit card, you're getting into riskier territory. And we are seeing default rates upward of 10 to 15, 20. Some of these guys are upward of 20%. Okay, because we work with them, so we know that. We have the data. And I do not know where the model is. Some have equity money which they're pumping in. But from a genuine model point of view, it's still evolving. And frankly speaking, credit card is more aspirational because their customer comes and says, "Ki, acha, mere paas credit card nahi tha, to aap mere ko give me a checkout finance and all that." So I think at some level, that's the problem which everybody is trying to solve. The whole strategy around customer acquisition. So a lot of these guys are saying, okay, I'll give you a 5,000 rupee loan and that's my customer acquisition strategy. And I bring in 1,000 customer borrowers, so-called, by doling out 5,000 rupees, and I create a pool out of that 70%, which is a paying customer. But unfortunately, what will happen is because you're originating money from, because most of them are borrowing money from other people, the banks are being very smart out here, if you ask me. They are building the credit models beautifully on top of these. And they'll just start giving a credit line to the good customers directly, because you're originating the loans for the on behalf of the banks and all that. That's why I have a concern around this neobank, because the best neobank right now has already been formed in India. That's the NPCI and the iSpirit guys. Okay, they're attacking every piece of the banking system, whether it's the payments, whether it's the origination of loans. They have a concept called OSIN. Then the account aggregator stuff is coming in. So I have a view out there on the neobanks and this credit models from that point of view. So I think we have to tread it a little cautiously on these models.
Yeah, I mean, the other thing which I believe has, why credit card, and the reason I asked about credit cards is because, credit card.
Gautam, you've gone mute.
much.
No, Gautam, you're fine. It's just that your voice is not cracking up.
Is the voice cracking now? Sorry, go ahead.
Now it's much better.
Okay. No, I think what I was saying was the reason I asked about credit cards is because credit cards have become an e-commerce proxy, and very few products, and the second advantage of credit cards is the fact that you don't have to innovate the network. Obviously, you have RuPay and NPCI, but the Visa Mastercard networks are very well as part of the online e-commerce system. And for those two reasons, you don't have to innovate the rails, and the fact that you can ride on the e-commerce growth is why I think credit cards are sort of still an important product even in this new sort of fintech landscape. Jiten, a very interesting fact that Nubank, right, one of the founders that you've been speaking to as well, was built first as a credit card, right, and then the neobank was built on top of that. Any reactions sort of in terms of what approach is better? I mean, can you build a credit card product and then build a neobank on top of it?
So, Gautam, building a credit product first, getting the customers, and then giving them the deposit product. I think this seems the new bank strategy, and seems a pretty good strategy if you ask me, because any credit product has an obvious pull. So any deposit product has a lot of push. So I think pretty good strategy. That being said, it is a double-edged sword. So when you start a credit product, and especially a product like credit card, it has its own cycle of maturity. It has its own cycle of portfolio management, systems, maturity, collections, processes, underwriting. So I think uh, for anyone to build a credit card product first and then getting into deposit, I think it's a minimum 4 to 5 years of history and cycle.
Yeah. It's a very important point.
If somebody tries to shortchange that, I think things might fall flat, in my view, and things may not be that great for anyone who's sort of trying to shortchange that cycle. And if you look at Nubank, they did it for what, 3.5, 4 years before they got into the deposit product. So, so I think good strategy for sure, but you need to have, and the other problem in that strategy, if you ask me, is your dilution as a founder, because it's a balance sheet product.
You have to, very smart.
When you do a balance sheet product first, you would have diluted yourself so much that by the time you try to reap the rewards, you're left with a single digits. So, so that is another big pitfall starting that way. So that is my personal view as a founder, because I'm a little greedy on the stake dilution as well.
Yeah, thus spoke a very experienced founder. So I think I think that's interesting. Ganesh, you are an investor in a few of these models, right? Buy now, pay later, and all of that. And Rajat made that point around high credit costs. Do you think? I mean, is there a viable model? Can't the credit cost just be priced in? I mean, simply, if you're going to attack a customer base with a particular customer segmentation or particular credit quality, if you can stay within the range and you can sort of price it, that should be a viable model despite high credit quality. I mean, otherwise the answer is that we keep serving only the affluent and the mass affluent parts of the population.
Yeah, no, that's a good point, Gautam. So two things. Yeah, we actually are investors in multiple buy now pay later companies, including in India, of course, Zest. So look, I think it doesn't matter whether it's buy now pay later or working capital or I don't know, P2P lending or credit card. I think all companies are not the same, right? I think it really comes down to the company's sourcing funnel, quality of filtering, their KYC or underwriting. What are they using for underwriting? How do they really operate the product in terms of phased evolution? How do they engage with customers? retention, collect. I mean, it's a whole cycle, right? So I think, interestingly, when it comes to lending, we can probably almost take any hypothesis and point to a company which will prove it. Whether the worst quality of credit or the best quality. So I don't think credit costs are high across the board, but for a lot of companies they are, because again, because of the way this whole ecosystem of functions I was talking about have been built. Having said that, at least across our portfolio, we are especially through COVID, we are extremely happy with the credit costs. We are credit costs and delinquencies and repayment and opt out of moratorium that we have seen. And in fact, there is a public slide, by the way, which people can look at, which compares Zest and some of the biggest banks in the country, etc. It's a public slide, so people, that data is available to folks and they can look at it. So that's one. The second is, I think it's not credit cost in isolation, right? It's two things. It's RAY and NIM. It's risk adjusted yield and net interest margin. That is what the focus of life should be, while ensuring that the pricing is fair to the customer. Obviously, you can't say it's unbounded pricing and then I'll create a phenomenal RAY. So risk adjusted yield is basically your pricing minus credit cost, right? And NIM is whatever your pricing minus cost of funds. So I think the focus of business model should kind of revolve around that. And while obviously saying that there are certain boundaries beyond which you could lose control, whether it's on pricing or whether it's on credit cost. So that's the second thing focus on. And the third is, I think, supply side. Like number of the newer age models, I think they some of the successful models, at least we see, are hybrid models where you have your marketplace models, which, by the way, we are investors in about 7 marketplace companies, all outside of India. But basically, it's a mix of institutional and retail. But as companies scale, we are seeing each of the companies, they are shifting towards institutional, because institutionals are initially hesitant, but as they start seeing it scale, they realize this is a place to actually deploy meaningful capital. And frankly, that is the way we are seeing it scale more than trying to sort of only scale on the retail dimension, but doing all of this without actually owning it on your own balance sheet, and trying to create risk models around it without having to linearly grow your balance sheet around it. So those are the combination of things we are seeing. So I know it's not a simplistic answer to your question, but I think those are 3 different dimensions for us.
Sure. I'm going to just do one fun round of questions, which you may or may not answer, but and then I'm going to go to audience questions. So the question is, and obviously, this is on the back of the Ant Financial IPO. Which entity do you think will be the first large fintech IPO in India? Rajat?
No, we want to be. Sorry to be talking like that. So incidentally, no. So we've been growing quite fast. We've done more than 2,000 crores of loans. We're growing at 20%. So I think we are in a good space. I'm sorry to be talking like this.
No, go for it.
Frankly speaking, we have our plans of next 2 to 3 years. In the terms of, because we are a zero balance sheet company, we do almost the numbers which other people are doing on the back of retail. We introduced our institutional piece of it. That's also getting exciting. So I think what we are building is an India model, which is we do nearly 125 crores of every month, even during COVID. Okay, so we didn't drop much. And our thesis on to talk about Ganesh's model, when I know they have invested across the world, except for India, in a non-balance sheet model. I don't know why. He's missing on to one of the best companies in Faircent. But the jokes apart, the thing is that the beauty of non-balance sheet business models or platforms is this, that during a shutdown like in India, we were originating a loan every day of the lockdown. Why were we doing that? I know I was talking to ICICI Bank, HDFC Bank. We are talking about certain things with them in partnerships. They had stopped originating new loans. Okay. We were originating 2 loans, even if they had the whole digital journey. We had the digital journey with KYC, video KYC and all that. but our lenders were lending money. And these were the people who were wanting to take a risk even during these times. And which a balance sheet lender had stopped doing that. Okay, because we have nearly 150,000 lenders on the platform, some people came in. It's same behavior we saw as what you saw with the online, stock markets. Moment it dropped, new sets of customers came in and they opened. We've seen that Zerodha has talked about the million new demat accounts they have opened, or whatever that huge number they have done. Same behavior we saw with us. Now the thesis is about institutional money is very good. It comes slowly, scales very fast, but it's non-sticky. The moment you have a bad story, they all go away overnight.
Correct.
Whereas retail lender, because you have 150,000 lenders out there, not everybody is going to take it. Now what is happening with us in a platform like ours, we're getting a lot of good borrowers, people who used to go banks customers. So since April onward, we have not disbursed a loan less than 750 CIBIL. Okay. Now, because earlier we were talking to a below prime customer, now the super prime customer is coming to us. Now, the lenders who are smart, they know that this is the best time to pick these up. Okay. Now, that's the reason our numbers have been growing 20% month on month. Okay. Though unfortunately, I actually don't like that your business actually grows during crisis like this. Okay. So I don't want to be happy about that fact. But the point is that we are seeing that. And that thesis about non-balance sheet. So Vinay and I have slept very well during this period in terms of our book and everything that we don't have any direct liabilities, no obligations. The only obligation we have is towards a lender to make sure the collections takes place on time, and we're talking about that. So I think the models which we are seeing now have to be built up. People need to invest on these, and low risk, zero balance sheet risk models will evolve in my mind. That's when you can start disrupting the existing models. If you're going to borrow money and lend money, I think ICICI Bank and Bajaj do an amazing job. How can your cost of capital be lower than them?
Sure.
40-year-old history of borrowing and lending. And history matters in lending. The only way you can disrupt these models is by creating a one. And I think I've given a long answer why I think we can reach an IPO.
No, I mean, we'll look forward to that.
I know it's not very humble to say like it's a little proudly I said that, but let's work towards it.
Yeah, good luck with that. Jiten,
No,
are you going to give a humble answer or a real answer?
I have not given a humble answer. Sorry, guys.
I'm skeptical, and at of any company for that matter. And
Sure.
I'm talking from a visibility standpoint today as we stand. And the reason I say so, and I'm not, of course, I have a limited knowledge about Faircent, so I won't comment about that. But so it is not in context of that. But I sort of look at the companies like Paytm or PhonePe and all of these companies like were massive volumes and all of that. And Razorpay, I would put in into
Sure.
the. But none of these companies so far have the financials to support the IPO story. So while they've got good traction in terms of the customers and the payment volumes and everything, but the financials are not supported. And this is where I'm a bit skeptical, and I'm talking about like a 3-year, 4-year visibility standpoint. And so I think that is where I stand.
No, fair. Ganesh?
Yeah, so I'll give you a short answer. We had an IPO last year, India Mart.
Yes.
Sub 5x.
Lovely stock.
And I completely agree with Jiten. If you take a 3-year view, it's not a question of what's the best IPO, who can even IPO is the question.
Right.
And my best bet is right now, again, without talking about my views on the business model, etc., it's Policy Bazaar.
Yeah, absolutely.
Happen, but that's it. It's going to be very hard for most others.
Yeah, my answer is also the same. It's going to be Policy Bazaar, and I think it's going to be big. And we don't have to get into the details around that, but yes, I think it's going to be Policy Bazaar. So great. I'm going to get into audience questions. Let me see what I want to pick.
Yeah. So how soon do you see? Yeah. So so this is on neobanking. How soon do you see RBI approving biometric KYC? How do you manage to? How would you plan to manage expectation of liabilities? I mean, particularly, I think the question is, how do you manage KYC when you're a neobank?
Sure. Yeah, so I think the KYC norms are tight for sure. For any entity, especially when it comes to liabilities accounts. Now, when you're saying how do you manage RBI approving biometric KYC, I think that is already facilitated by a business correspondent can do biometric KYC on behalf of the bank. The video KYC, of course, has to be in the domain of the bank. So, but this is, I don't see this as a big friction point. Of course, the life can be much smoother, but I don't see this as a friction point per se.
Sure. There's a question for Rajat. Rajat, are P2P loans subject to moratorium?
So look, when it came out, they were subject to just that it came to for all NBFCs. So we took a view that it will be. So we've given that, and we explained to our lenders. But our number of loans which went into moratorium was quite less. So that's the only thing.
Okay. Ganesh, do you have any views on account aggregators?
Sure. Yeah, I think there are probably, frankly, 6 or 7 likely candidates, 5 of whom we actually know quite well. Account aggregator should eventually become a hygiene factor. But I think given that it's getting started now and we're trying to find some use cases to kind of get folks to onboard the ecosystem players on certain use case, I think that is the stage we are at right now. I think it's a good initiative to sort of really catalyze this whole digitization of ecosystem. The challenge, like I said, is we need to really figure out how to bring it down to the level where all players in the ecosystem understand and know how to play and make it succeed. But I think it's certainly eventually I think it will be a hygiene factor. I do not think account aggregators are likely to be business models that you can solely back. A company could be account aggregator along with some other things they are doing, like if you talk to Govi at Perfios, he'll talk about their vision, or if you talk to some of the others. But it's probably definitely a well needed plug in the ecosystem gap.
Yeah, I think Ganesh, you can take one more question. What is your take on supply chain manufacturing for manufacturers to the retailer segment, where particularly with regard to low ticket invoice values?
Yeah, I actually saw that question and I was thinking about it. I mean, it's a space where we have looked at quite a few things across markets, and we have a couple of portfolio companies which also enable that, along with some other solutions for retailers. So I think in isolation, just as a lending solution, it's been challenging, both to create sort of distribution and to underwrite effectively at a reasonable cost to make the business model viable for such small ticket sizes. Where I think it's possible to make it work is if you actually have a relationship through the anchor, and through the anchor you get access to kind of the retailer base, and which kind of facilitates the relationship and underwriting because of the transaction data, and also probably collectability, because if you have an anchor relationship, the retailer would most likely take it more seriously, and collections will be less of a challenge. And that's we have seen this in multiple places. But yeah, the challenge is, if you want to build an independent model, if anchors are not willing to play ball, then it's typically been difficult.
I think there's a comment. I don't know if it's a question. There's a question. There's a comment that PayU and BillDesk are IPO ready. Jiten can comment on PayU. Yeah.
Possible actually, both the companies, because both the companies are profitable and sizable scale actually. But I'm not sure the sponsors of those companies are looking for that. So that's why I did not include in my list.
Yeah, I mean the only. Yeah, go ahead, Ganesh.
Of course, Jiten knows this better, but The one thing I do know is there are a number of bankers who have been pitching them, but
Yeah.
the last comment Jiten made is more important, which is what do the insiders want?
Yeah.
Yeah, I mean, one comment I'll make is that if you build a really valuable payments business, then there are very large strategic payments acquirers, payment consolidators who will come and acquire you. So probably they may not go the IPO route, and you may not even need to hit profitability, and you may still get acquired at a very high value if you build something very valuable. So I think
The regulator doesn't come after you after that.
Sorry, Ganesh, what are you saying?
I said, assuming the regulator doesn't come after you 90 days
Yes.
after the transaction. So I think the story.
The only exception being First Data's acquisition of ICICI's merchant business. But that's fine. So let me just see if there are any more questions.
No more. Gautam.
Yeah, I think we are good. Okay, since we have quick, since we have like couple of minutes left, Ganesh, we didn't talk about insurance. Any thoughts on insurance market? I mean, you invested in insurance tech businesses. How is that space evolving in India?
Yeah, I think insurance is something we are very excited about because it's in general. I think there are challenges, and there are, first of all, there obviously massive gap. Secondly, it's not sort of one product. It has so many different variants to it. Whether you look at the health, life, general insurance, SME, consumer, there's just so many different variants. Third is it's a business that cannot be easily copied because it takes an effort to even understand insurance business as well. So there is massive gap in the market, massive gap, and mis-selling and all kinds of things. It's probably several years behind number of other things we see in financial services or fintech. The obvious challenge, of course, is in classic distributor models, where you do not have much of a say in product design and servicing, and obviously you're not a manufacturer. There is not much space for innovation, and becoming a manufacturer or becoming a product design player by, let's say, renting a license, which is possible in some countries like South Africa, where also we have insurance portfolio companies. Unfortunately, it's not easy in India, and that's the frustrating part. I think so. I don't know when things will open up, but it's a massive gap across the spectrum. If you look at if you segment out InsurTech.
Phenomenal. So I'm going to just close it here. I think we've touched a few points. There's a bunch of things that we have not covered. We've not covered investments. Obviously, there are multiple other things happening in the fintech space. Probably another session. So Rajat, thank you. Thanks for participating. Good luck as you get closer to your end goals and IPO, like you said. Jiten, good luck for the launch, and thanks for participating. And Ganesh, obviously you are in the thick of things, so keep feeding us all the insights.
Thanks, Gautam.
Thank you, Gautam. Thank you, Jiten.
Thank you,
Ganesh, Rajat.
Thanks, guys. Thanks, Jiten. Thanks, Rajat.
Thank you, everyone, for joining us today. Yeah, we'll share the recording later in the group. Thank you, everyone.